Hey guys, it is Julie here with TipRanks, and today we're taking a look at recent buy ratings from the very best analysts in the services sector. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're looking at the top 3 analysts in the service sector and 3 stocks that they've given a buy rating to lately. These guys have impressive track records, including one that has a 100% success rate on a recent stock. So we're going to take a look at the companies, what it is that they do, and what Wall Street analysts are predicting for their stock's future. Of course, you can follow along on the TipRanks website or by downloading the TipRanks mobile app by using the links in the description down below. Under TipRanks, we're headed to the Expert Center to look at top analysts, and we're going to be focusing on that services sector today. In the top 3 spots, we have Patrick Brown from Raymond James, Jason Seidel from TD Cowen, and Scott Ciccarelli from Truist Financial. And we're going to dive right into things with our number 1 ranked analyst, Patrick Brown. Over the last 2 years, Patrick has a success rate of 82% and an average return of over 28%. His most recent rating came in on CWST just today. He gave the stock a buy rating, and he's rated this stock 51 times before and has an incredible 100% success rate on the company. So that is obviously pretty impressive, especially considering how many times he's covered the stock. Trading under the ticker CWST, the CWST stock has a market cap of $4.5 billion. Currently trading just shy of $88 per share, their stock has seen growth of 32% this past year and is up about 7% over the last few months. As you may have been able to guess from the company's name, they are in the waste services business. The company offers a wide range of services, including service to residential, commercial, municipal, and industrial customers, primarily in the areas of solid waste collection, transfer, disposal, recycling, and organics services. Servicing primarily the New England area, they have 50 collection operations, 26 recycling facilities, 9 disposal facilities, and 3 landfill gas-to-energy centers. They reported their Q1 earnings report near the end of April, where they did come out with an earnings beat. And that is one of many earnings beats that the company has had. Looking at their track record, we did have one miss there back in February, but they have very consistently exceeded analyst expectations. Their earnings per share of 10 cents came in 3 cents ahead of analyst estimates, and revenue of $262.6 million for the quarter was up over 12% year over year. In that report, the company's CEO said that the level of execution in the first quarter reflects the continued focus and agility of our team to outpace cost inflation. Further, we have not experienced meaningful indications of an economic slowdown in our business, as solid waste volumes were positive in the quarter and other key operating metrics are stable. The CWST company doesn't attract too much analyst attention. Right now, the stock only has 4 current analyst ratings, coming in as a moderate buy. There are currently 3 buy ratings and 1 sell on the stock. The average price target of $101 would be an upside potential of over 15% from current prices. We do have that 1 sell rating from 2 months ago, but the rest all buys coming in the last couple of weeks, including 2 today. Here we have our top analyst, Patrick Brown, who gives the stock a price target of $104, which would be an upside potential of 18.5%. Our second top services analyst is Jason Seidel from TD Cowen. Jason has had a success rate of 77% over the last 2 years with an average return of over 40%. His most recent rating came in today on Schneider National. Now, he has rated this stock 16 times before and has an impressive success rate of 86%. The Schneider National stock trades under the ticker SNDR, currently priced at about $27 per share. Now, their stock has seen growth of 20% the past year, up 12% the last 6 months, and a few percent the last 3. Schneider also pays a quarterly dividend. The current dividend is 9 cents per share for a dividend yield of 1.22% and a very healthy low payout ratio. Schneider National is a transportation and logistics services company. The company operates through 3 different segments, with truckload, intermodal, and logistics. That includes freight transportation, door-to-door container services, and brokerage and supply chain services. Schneider has been in business for 88 years with over 250 properties worldwide, and they travel over 9.8 million freight miles per day. The company also reported their latest earnings report near the end of April and came out with a solid earnings beat. On the earnings per share side, they did report 55 cents, which was 10 cents ahead of analyst expectations, and they have had solid history of beating those expectations over the last couple of years. Their operating revenue did come in at $1.4 billion, which was down slightly from the previous year. Their president and CEO said that despite these challenging dynamics, they recorded the second highest first quarter revenue and earnings in the company's history. Their expectations are for freight conditions to remain difficult for the second and third quarters of 2023, followed by seasonal improvement in the fourth quarter. The Schneider stock currently has 7 analyst ratings, coming in as a moderate buy. With a price target of $32.50, that would be an upside potential of 19% from current prices, and that breaks down with 5 buys and 2 holds. We can see our most recent rating coming in today from our top analyst, Jason Seidel, with a buy rating and an upside of 20%. In the last couple of weeks, we have a couple other very bullish price targets, plus a 1 hold from last month with still a slight upside of 6%. And our third top-ranked analyst is Scott Ciccarelli from Truist Financial. Over the last 2 years, he's had a success rate of 74% with an average return of nearly 34%. Now, he did recently rate a couple stocks a hold, but we're looking at the most recent buy rating with Home Depot. He has rated this stock 60 times before and has an impressive 92% success rate. Now, you're likely more familiar with the Home Depot stock compared to the other two. The HD stock currently has a market cap of nearly $303 billion, trading at about $300 per share. They have seen overall growth of 10% this past year. Though they did dip over the last few months, they've been climbing back in the last few. The Home Depot stock has been paying a dividend for over 35 years. And their current quarterly dividend comes in at $2.09 per share for a dividend yield of 2.66%. The company was founded back in 1978 and is now the world's largest home improvement retailer. With over 2,300 stores, they focus on selling building materials, home decor, flooring, appliances, lawn and garden products, tools, and other merchandise. They also offer installation services, including tool and equipment rentals. Home Depot did just host their Investor Day earlier this week on June 13th, and they did reaffirm the full-year guidance. For 2023, they are anticipating sales to decline slightly between 2 and 5%. Their CEO made comments that they operate in a large and highly fragmented market with unique characteristics that make it one of the most attractive sectors in retail, if not the economy as a whole. While they are the #1 home improvement retailer in the world, they say they have a relatively small share of the market today and that there are significant opportunities in front of them. They shared their Q1 earnings report back on May 16th, where they did come out with an earnings beat. And this is another company that has a pretty solid track record of exceeding those analyst expectations. For May 16th numbers, they came in at $3.82 on earnings per share, which was 2 cents ahead of analyst expectations. They did report sales of $37.3 billion, which was a decrease of a few percent year over year. The Home Depot stock does gather a bit more attention from Wall Street analysts, currently coming in as a moderate buy with 25 current ratings. With 15 buys and 10 holds, the average price target is just shy of $320, which would be an upside of 6%. And we have a lot of analysts reiterating price targets following that Investor Day, so a bunch from yesterday and a couple days ago. Down here, we have Scott, one of our top analysts, who does have an upside of 5.5% on the stock. Now, analysts are a bit more mixed here. We do have a couple holds with downsides of 3 and 8%, and on the high end, a couple buy ratings with around 15% upside. So those are the recent buy ratings from 3 top-ranked analysts, all with some very impressive success rates on these stocks. Let me know your thoughts on these in the comments down below and which one you think has the highest potential. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what these Wall Street analysts are doing and providing some information and entertainment. Make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.